self-rentals. Basically you are renting, for example, your home to your business. Tell us how this works and when you've gone too far.
Yep, some of you might know as Augusta Rule or the 14-day rental rule. It's called the Augusta Rule because it originated in Augusta, Georgia, where the masters are at. And I actually have some clients that do this. They rent their home for 2 weeks and during that masters, and they get $40,000 in income, and they don't have to pay any tax on that income. So basically, if you keep your home under that, those rent your home to your business for those 14 days or less. It doesn't have to be consecutive. You have your business gets a deduction for the rent, and then you as an individual don't have to pay tax on that income. So, and it has to be your primary residence. So that's one of the catches. It can't be other like another rental property or anything. It has to be your personal residence. And one area that I've seen people get in trouble besides, not using the proper home is that they try to do too big of a reasonable rental rate. So there's definitely, I've seen this strategy so much on like TikTok and social media, and I'm a little more conservative in this area when it comes to the determining reasonable rental rate. But you can look at comparable Airbnbs. You can also look at conference rooms in the area for like Regis centers or hotels, etc. And what I like to do is get a price per square foot of what a 1-day rental would be for something like that, and get like 2 or 3 of them, average them out. And what a lot of people will do though is they'll take like a super nice Airbnb and say, oh, it's $2,000-$3,000 to rent for the week or the month or something, and it's not comparable to their home, or they try to do it for the entire house as well. I tend to go and say, hey, get that price per square foot, that average, and then apply it to the areas that you're using. So like, I don't include my home office because I'm doing my home office deduction. I don't include the upstairs where my kids' bedrooms are at and like the playroom. I just do it for like the kitchen, the living room, the hallway to the bathroom, things like that. And so that's definitely a lot more conservative than other people. But I always try to look at things from the eyes of an auditor. And so like, for example, if I tried to include my home office, they'd be like, well, I can see that as being double dipping. And so, yeah, that's kind of my take around it.
Yeah. And that's how we've done it, is comparable Airbnbs. We actually print them out on the day, that meeting was, and keep them and keep those in file in the event we're ever audited. But I think I might actually be more aggressive on this one than you are. I generally have used the whole house. I've not tried to limit it to, whatever space was touched for the meetings we have there. WCI doesn't have a headquarters outside of my house. And so that's what we've done there.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.